Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Roger Nanney, Vice Chairman of Deloitte LLP, about the results of the firm's recently released survey of middle market executives showing an enormous post-election resurgence of optimism about the U.S. economy.
Man, what a report! I mean, what a what a turnaround! I think it's interesting. I looked in the details of when the report was taken. It was all after the election, which
That's right.
I think clearly had a pretty. I mean, if you look at the stock market, if nothing else, and you look at the consumer confidence ratings and the right path ratings and all that stuff, boy, the election really seemed to have a pretty profound impact. I mean, in terms of the confidence of mid-market executives, they're pretty astounding numbers.
There were big jumps on the confidence measures. It's funny. We did want to move the survey to follow the election, obviously, so we could get some sense for what the potential impacts might be. There was another thing that was happening too, though, Paul. 2016, we saw some beginnings of the firming up of the economy. We had several quarters where GDP was up significantly. As you watched, employment has continued to do well, and as you've mentioned, consumer confidence. So with a strengthening economy as we ended 2016, and then an election result that really brought an administration in that was speaking to a lot of the issues that businesses are concerned about, especially these mid-market companies. It sort of got a double hit there in terms of what I think is the first time we've seen optimism this high in a long time.
Yeah, and the whole Trump phenomenon, I guess is the way I'd put it, is really quite intriguing in a lot of ways. I mean, with respect to mid-market companies, because you're right. I mean, he sort of does speak to a lot of the things that in your surveys have in for a very long time, frankly, have
right.
pointed out, which is the concerns about regulation. I mean, which I think is probably the biggest, to be very honest with you. Tax, healthcare, all of these things. It seems like a perfect storm, with perhaps the exception of trade, and I because trade is sort of the wild card in all of this, in the sense that there is and it all depends. It depends on how you read things, but I mean there seems to be a sense of protectionism in the air, which is sort of a cyclical thing in American politics, as you know. And that, protectionism creates winners and losers. And I wonder, I mean, there was, in the survey, that was kind of brought out a little bit in the sense that there are winners and losers, and there are people that are concerned about that, and the fact that so many mid-market companies have global supply chains, even if they're not, importers or exporters per se, they have global supply chains. What's your sort of sense on that? I mean, based on the survey results and based on, the folks you talk to every day.
Well, that was an area that was quite interesting to me because, as you said, I had a handful of takeaways, and it does sort of combine my understanding of what the survey respondents said, but also when I'm out talking to clients, you've got this issue of the skills gap, which continue to be we can talk about that some when we talk about talent, but with the skills gap and these companies needing to continue to hire skilled workers, they're looking abroad to put those, to get access to a broader talent spectrum. And you saw in the survey that, these companies that, have foreign operations are planning to hire more people abroad. And as you say as well, the supply chain implications, can be pretty significant because companies over the years have, obviously developed infrastructure and ways to, run their businesses that count on being able to source different sorts of parts of their business from different parts of the world. And in the survey, you do see a little bit of a tug of war in terms of how the respondents viewed, trade policies, these new trade agreements. There were almost equal numbers of people who said we should be, relaxing import and export regulation, with a similarly sized group on the other side saying we should be strengthening regulation. And it was the same outcome for these these trade agreements that have been under consideration. And so that was the one part of the survey where you didn't see a consistent level of momentum in one direction, which I do think is quite interesting. And when you look at where these companies have their business operations, it's Canada, Mexico, it's over in Western Europe, and also beginning to have more and more both trade and starting up business operations in China and Asia. And many of those countries are, part of what the headlines are all about. So that will be an interesting sort of issue to watch it play out as the details of what the administration's policies are going to be begin to show themselves. Yeah,
and it's well, I guess, and this is just a personal opinion. I'm looking at sort of the rhetoric, the campaign rhetoric versus what's actually happened so far, and it's early days, obviously, but there is sort of a walk back, from some of the more inflammatory stuff, and I don't know, from my perspective, and Roger, I don't know if we've talked about what I do, but I have other interests, and they're actually overseas, and we purchase from all over the place, and we sort of have to, and to me the whole protectionism concept, or maybe that's too strong of a word, but at the very least sort of the going away from the liberalization of trade policy. It's to me, it's like a sugar rush. It can, in the short term, yes, you'll get great results because U.S. domestic companies will gear up and they'll do all kinds of things. That's great. In the long run, it just doesn't work. In the long run, you end up with Detroit, effectively. I don't mean to be negative, but that's kind of what you end up with. Detroit in the 70s, where the first touch of international competition knocked them over because they'd gotten fat and happy, right? So I don't know. It's going to be interesting to see how that all plays out. But to your point, on the talent gap, that just does not seem to go away. We've been doing this. We've been talking about this for years. You and then your predecessor, right, Tom, and I've been talking to other folks about it at other firms, and it just will not go away. It doesn't seem to be getting any better. And that again came out in your survey that the talent gap is becoming extraordinarily challenging, and there's, of all things, that we can do about that domestically, it strikes me as that's something that we could be able to correct. What again, based on the survey, obviously everyone's worried about it, or most folks are worried about it. But in your conversation with clients and your colleagues, what are the solutions here? If there are any.
Well, I think the one standout item in the survey that continues to emphasize your point is, top investment in the talent arena coming out of the survey continues to be training. And these companies, because they can't find the skills that they need for the jobs that they have available, they're making investments in their own training infrastructure to create the employees that they need to to operate across the various jobs. And they are combining that now. We did also see in the survey that they are looking now to increase compensation. They expect to see their part-time employment increase. And they're, almost to this point, beginning to pull on all the levers, including, hiring more people abroad. So, with these mid-market companies, they tend to be, pretty flat in terms of structure, and they tend to be pretty agile. And so what you find right now is they see opportunity, as we saw in the optimism part of this. And so now they're beginning to sort of take matters into their own hands when it comes to filling the skills gap. And if we, continue with the employment we have, it's just going to present a greater challenge. Although the survey also pointed to the fact that, many of the respondents see the unemployment rate or the lower unemployment rates easing a bit next year. And so we may get a bit of relief in terms of being more people. But the labor participation rate, if you watch that's still a challenge. We need more, we need more people engaged and being part of the workforce. I mentioned this, it might bridge us to the other conversation that was the high investment priority, and that's technology. That, in and of itself puts more pressure on the skills gap, because these companies are increasingly investing in technologies, emerging digital technologies, the cloud, and a myriad of other things. And it's intended, number one, to increase productivity and as well increase customer engagement. And you've got to have employees that know how to operate the technology. And as they continue to evolve, we've got to look for ways across all of our infrastructure to train people in the sorts of jobs that these companies need.
Yeah, it's interesting. There's a lot of concern about from the millennial side of things, and there's a personal element to this. My children are millennials, so one's always concerned about what their opportunities are. But the investment that you're referring to in technology, digital, pretty much everything. One would hope that would provide a lot of opportunities for millennials. I mean, to your broader point, I mean the participation rate. To me, that's always been the key number. It's not the unemployment rate is really a function of the participation rate. That's a function of actual employment too, certainly. But if the participation rate goes up and your unemployment rate goes down, you really haven't gained anything when you really get down to it. And that's often missed. But again, I mean, it sounds like mid-market companies are really sort of hungry to invest in both training, but also in terms of technology. I mean, what areas are you seeing that's what's driving that in these companies?
Well, again, the top, I think, area that they are in pursuit of is increasing productivity.
Right.
And as it's one of the ways to help you, again, with the talent side of things. If you can take advantage of technology platforms that allow you to really improve your productivity metrics, then, you're not as dependent on continuing to hire as larger numbers of people. You just need those with the right skills. There's so much going on right now in terms of technology disruption and innovation, Paul, that in fact, I'd even refer you to take a look at our Tech Trends report that just came out a couple of weeks ago. And essentially, one of the themes in that report is technology disruption and innovation and continued, different types of products that are out there. It's moved the strategy around IT from the IT department to the boardroom. And they're very important strategies now that you need to consider, and you really have to try to sort through all the myriad of technology choices that you have these days, and try to be disciplined around focusing on those that can provide you with the best business answer, the best value for the customer, and stay focused on trying to execute that strategy in the longer run, because it's there's just a lot happening in the arena, and I don't see it slowing down. It's one of those disruptions that we often talk about.
No, I think you're absolutely right. It is not slowing down at all, which actually, in this, I don't think, if it was, I apologize, I may have missed it, but I don't think this technology issue was raised in the survey. I mean, one of the things that I'm almost obsessed with in talking to folks and seeing what's going on in the environment is robotics, right? And the AI and robotics. I guess those two things. I'm just wondering, have you been hearing a lot of that percolating up from mid-market companies? I mean, we may be on the threshold of that big disruption, or we may be in the midst of it, and I honestly don't know. I just wondered if you've heard anything, in your dealings with middle market leaders in terms of, how those two things are really, progressing in this marketplace.
I do see that happening. Machine intelligence and the whole area of AI, and how you can begin to apply robotics to automating more mission-critical kinds of tasks. Those are things that are, those aren't just areas that people are thinking about. They're beginning to apply the technologies. It's funny, I was in a little demo a couple of weeks ago in one of our Deloitte greenhouse labs of this robot called Pepper that the SoftBank Corporation has a robotics company on the West Coast, and they were demoing how you can utilize this robot and technology in retail stores. It's made for mid-market companies to leverage and have them a broader level of customer engagement and store all that knowledge for when somebody walks in a different location of the same store, it remembers everything they looked at and offers up opportunities. So there are applications today that are real world that are adding value and improving productivity and allowing companies to implement their strategies in this new world of technology that is constantly evolving.
Yeah, it's really extraordinary. The pace of change is just extraordinary. And like you said, it's not going to slow down. We're kind of bumping up against it here, as we always keep this to 30 minutes.
Sure.
So I guess, and there's a lot more to talk about, but time-wise, we're kind of bumping up against it. I mean, I guess so. Generally, then, Roger, I mean, what's your overall take on the results of this survey? I mean, it's obviously a pretty there's a lot of optimism, but as we've talked about, there's an awful lot of challenges too. I mean, what's your overall take?
Well, let me leave it at this, Paul. One of the other survey metrics that we looked at is level of uncertainty about the economy and about the business. And this survey, while it had off-the-chart numbers in terms of economic optimism, we had a similar jump in terms of levels of economic uncertainty. And that, I think, has a lot to do with there being these broad things we see, policy areas that are focus areas for the administration. We've got an economy that looks like it's strengthening, but that's still at the headline, sort of level. And as the details begin to get worked out, we'll know a lot more about what's going to, the way this economy is going to go. What that says to me in terms of what I talk a lot to clients about is there's no better time to begin to dust off your scenario planning discipline We've got a lot of different potential things that can happen in the tax area. Do scenario planning on that. If this happens, what do we do? Same with your talent, building your culture. Focusing on culture is going to be very important. Thinking about your M&A strategy, IPO opportunities with interest rates rising, scenario plans around potential needs to recapitalize your capital structure. There are a number of things across each of the areas of your business that deserve a disciplined planning approach so you can be ready to take advantage of the opportunities when they present themselves.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.